The global financial markets of 2024 have delivered a rich and complex narrative marked by the dynamic interplay of macroeconomic challenges, geopolitical tensions, and the evolving behavior of institutional and retail investors. At the center of this drama are the precious metals, gold and silver, whose performances have surprised even seasoned analysts. This year, gold, in particular, has broken free from conventional patterns, posting significant gains while defying traditional expectations. Silver, often overshadowed by its more illustrious counterpart, has also shown potential, promising robust returns as industrial and speculative demands align. Gold's ascent in 2024 has been nothing short of remarkable. Traditionally viewed as a hedge against economic instability, gold has often rallied during periods of financial uncertainty. Yet, what sets 2024 apart is the timing and nature of the rally. As the global economy faces a weakening labor market, manufacturing recessions, and the risk of a broader economic slowdown, gold has not only benefited from these factors, but also demonstrated resilience in anticipation of these trends. Analysts anticipated that these economic pressures would support gold prices later in the year, but the surge began much earlier, signaling a deeper undercurrent of demand. One of the primary drivers of this rally has been the role of central bank gold buying, which reached unprecedented levels in 2024. Emerging markets, particularly China, have aggressively accumulated gold, responding to geopolitical disruptions like Russia's invasion of Ukraine and fears of sanctions on financial assets. This strategic move reflects a broader trend of diversifying reserves away from the US dollar, positioning gold as a safeguard against economic and geopolitical uncertainties. The data is striking. According to the World Gold Council, central bank purchases surged in the first 3 quarters of 2024, exceeding 694 tons. The last quarter alone saw a doubling of purchases compared to the same period in the previous year, totaling over 186 tons. This relentless buying spree has not only supported gold prices, but also established a new price floor, consistently keeping gold above the $2,500 mark. For context, these levels were considered overly optimistic by many analysts at the start of the year. Gold's rally has garnered the attention of institutional investors, with major financial powerhouses such as J.P. Morgan and Goldman Sachs revising their price forecasts upwards. Current projections place gold's potential at $3,000 per ounce in the near future, a figure that was once viewed as speculative but now appears increasingly achievable. This alignment between institutional expectations and market performance underscores a growing consensus about gold's strategic importance in the current financial landscape. Moreover, the involvement of institutional players has injected a layer of credibility into the bullish narrative surrounding gold. This shift in sentiment reflects not only the appeal of gold as a safe haven asset, but also its evolving role as a cornerstone of portfolio diversification in an uncertain world. Geopolitical factors have always been a significant influence on gold prices, and 2024 is no exception. The ongoing tensions between major powers, regional conflicts, and fears of global economic fragmentation have heightened the appeal of gold as a store of value. Notably, the conflict in Ukraine and its ripple effects on global trade and finance have accelerated gold purchases by countries seeking to mitigate risks associated with potential sanctions or financial isolation. China's aggressive accumulation of gold stands out as a strategic response to these geopolitical risks. By increasing its gold reserves, China not only reduces its reliance on the US dollar, but also strengthens its financial autonomy in the face of potential global disruptions. This trend has been mirrored by other emerging markets, which view gold as both a hedge against external vulnerabilities and a key component of financial security. While gold has dominated headlines, silver has quietly positioned itself as a promising investment, leveraging its unique dual role as both a precious and industrial metal. Silver's performance often mirrors gold's trajectory, but its extensive use in industrial applications such as electronics, solar panels, and medical devices adds an additional layer of complexity to its market dynamics. Analysts are optimistic about silver's long-term potential, despite acknowledging that its initial performance may lag behind gold. As global industrial demand recovers and green energy initiatives expand, silver stands to benefit significantly. This dual appeal, combining industrial utility with investment allure, makes silver an attractive option for diversifying portfolios. From a technical perspective, gold's breakout in 2024 has been a defining moment. Resistance levels between $2,720 and $2,760 have temporarily capped gains, but the broader trend points toward much higher price targets. Some long-term forecasts suggest that gold could reach $8,000 to $10,000 per ounce in the medium to long term, driven by persistent inflationary pressures, geopolitical risks, and favorable monetary policies. Silver, too, is expected to follow a similar upward trajectory, albeit with its unique set of challenges and opportunities. Its industrial applications tie its performance to broader economic trends, but its role as a precious metal ensures it benefits from the same macroeconomic tailwinds driving gold. The dynamics of 2024's precious metals market can be better understood by examining historical patterns. For instance, following Donald Trump's election in 2016, gold experienced a temporary decline, despite expectations of inflationary policies that would typically support gold prices. This period highlights the importance of distinguishing between short-term market reactions and long-term trends. As Lobo Tiggre notes, investors must focus on concrete policy implementations rather than reacting impulsively to political events. The broader lesson is clear. Markets are often driven by a combination of sentiment, speculation, and structural factors, making it essential for investors to adopt a nuanced approach. In recent years, cryptocurrencies like Bitcoin have emerged as competitors to traditional safe haven assets such as gold. As Bitcoin approaches the six-figure mark, it has attracted significant attention from both retail and institutional investors. However, the volatility and speculative nature of cryptocurrency markets differentiate them from the stability offered by precious metals. Tiggre warns that speculative bubbles in cryptocurrencies can lead to rapid corrections, creating risks for investors. While Bitcoin and other digital assets offer unique opportunities, they lack the time-tested stability and intrinsic value that gold and silver provide. For investors seeking a balanced approach, precious metals remain a cornerstone of financial security. As we approach 2025, the outlook for gold and silver remains robust. Persistent inflation, geopolitical uncertainty, and evolving monetary policies are expected to support continued growth in the precious metals market. Central banks, particularly in emerging markets, are likely to maintain their aggressive gold buying strategies, providing a strong foundation for future price increases. While short-term fluctuations are inevitable, the long-term trajectory for gold and silver points towards significant upside potential. For investors, these metals offer not only a hedge against economic instability, but also a path to substantial returns in an increasingly complex financial landscape. The story of gold and silver in 2024 is one of resilience, opportunity, and adaptation. These metals have demonstrated their enduring appeal, responding to a wide array of macroeconomic, geopolitical, and speculative factors. For investors, the lessons of this year underscore the importance of staying informed, adopting a long-term perspective, and recognizing the unique value that precious metals bring to a diversified portfolio. As the global economy evolves, gold and silver stand as enduring symbols of stability and growth. Whether as a hedge against uncertainty or a cornerstone of investment strategy, these metals continue to captivate the attention of markets, offering both security and promise in an unpredictable world.